Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius Anucauskas. Today is the 12th of December, 2023. So, welcome, everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. The content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can always reach out to us, guys. So now then, let's have a look at the charts. Okay, let me just have a quick look here. Right, okay, guys, today we have an interesting day, of course, as you know, in US inflation numbers are coming out, so I'll pick up on that in a bit when I'll jump into the US indices, but let's start off, let's kick off to see what happened with Nikkei. So Nikkei yesterday did rally, oh, and this is where it's interesting. It actually did rally nicely and it pushed higher and it pushed towards my trend lines here. But it kind of stayed below them. So we had a violation of this kind of a steeper one, but it didn't really work out well here for the bulls, I would say, because that downside line, although it's a little bit on the tentative side, it still kind of provided good resistance, and we saw it drift back down. Now, I'm not saying that this is like a very, very bearish indication or anything. No, it's just something for you to keep in mind. Because look, on one hand, we are still below these two trend lines, which, to be honest, are a little bit on the tentative side. So they might not carry much significance. On the other hand, we're still above the all the EMAs on my daily chart here. So in a way that kind of puts this like a little positive spin on the whole outlook still. But in general, we have to be careful because the stock market is very overbought, and unfortunately, the problem right now is that it can continue rising. However, we don't know how much, because if you're, let's say, jumping in right now, maybe you're actually capturing the last bits. I don't know for how long. Sorry, something caught in my eye. But I don't know for how long that rally will continue. So maybe Nikkei, maybe people who are trading Nikkei are actually seeing this a little bit better, and they're a little bit trying to be a little bit more on the cautious side. Because if suddenly the US and the EU indices start reversing sharply to the downside, then well, they may drag Nikkei and China 50 and ASX 200 after them. But of course, that's why maybe we're not seeing some like big crazy buying activity right now in Nikkei 225. So but if by any chance we start climbing back above the 33,000, let's say 200 zone, roughly around here, let me probably put something like a highlighter here just for our future reference. So basically, if we do get a nice push above this territory right here, then yes, I will get a little bit more excited with the upside, because at this point I'm just observing the price action, because again, we are quite overstretched on other indices, so on other top indices, I would say. So maybe a bit of a retracement at some point would be needed. However, I get it. I at the moment it's like trying to well, not trying to catch a falling knife, but on the opposite, right? Trying to, I don't know, catch a, let's say, an arrow, all right, which is just flying up high. I mean, eventually it will run out of steam, but and then we will try to catch it. I mean, everybody's trying to catch it, of course, as much as closer to the peak as possible. But again, okay, we don't have crystal balls, so we don't know where exactly what would happen. That's why we wait for confirmation. So that's my situation with Nikkei. This morning we got some data from Japan about they released their PPI numbers, better than the forecasts. However, the year-on-year was worse than the previous, like 3 times worse than the previous. However, the month-on-month one was much better than the previous. So again, go figure, right? So let's have a look at China 50, guys, instead, because at the moment, I think that, yes, we are at a very interesting spot here. Look how well this lowest point of 2022 is providing support. Look how well it's doing that job. And I talked about this, and I said that in order for me to go lower, a drop below this territory is required in order to go and aim for that lowest point of 2018. That's a good potential target, but again, at the moment, it's a very strong area of support right here around that 11,158 zone. So if you are looking for some higher levels, then, well, maybe this is the point. However, let's say we could see maybe a rebound back up here towards this upper side of the falling wedge pattern. Again, we have a potential falling wedge pattern. Now, this is where it a little bit contradicts with what's happening in general in the global arena, in the Western indices. So those keep on rallying, and China is like somewhere like stuck in there, right? That's why with China 50 index, I think it will be a little bit on the tricky side. We might see these like little spikes here to the upside, but if suddenly the top indices reverse, then yes, I mean, we could see China 50 also falling off the cliff here. So that's why, but my downside scenario will come around here somewhere. So yep, I'll keep that. I'll keep that for now like this. In order for me to, let's say, get very comfortable with the upside on this one, look, I cannot really get very comfortable with this one with the upside yet. Probably the better option for me would be to start looking at some higher levels. I mean, I'm looking at some higher levels right now. As long as we remain above the 11,400 zone right here, because you can see that it acted as a good area of resistance, kind of ish, I would say, and we pushed back up. So we are staying above it right now. So as long as we remain above that territory, I will consider a move towards the upper side of the falling channel. ASX 200. So there we go. This one again testing the upper side of the rising channel. Okay, I mean, everything's according to the plan, but look, all of us are probably hoping to see some sort of a correction at some point in the U.S. indices, in the European indices, but again, at the moment, it's not coming. The index just, I mean, I'll jump into those in a bit, but those just keep on rallying. So there's like no breathing space for the bears. But okay, look. For now, ASX 200, I mean, this one is a little bit on the modest side, I would say, and we're currently getting a hold up near the upper side of the rising channel, so maybe we could see a bit of a retracement again if this upper side of the rising channel continues to provide resistance. Now, in order for me to consider some lower levels on this one, I'll stick to the same game plan and drop back below the 7,174 territory. Could do the trick for a few more sellers here and within the rising channel, because don't forget, if we are still within the rising channel, even if we drift lower, this could still be classed as a temporary correction before another possible leg of buying, as long as we remain above the lower side of the rising channel. So yes, that's the idea. But of course, if we start breaking the lower side of the rising channel, well, guess what? More sellers here could join in. Dow Jones Industrial Average. So, guys, okay, today in U.S. inflation coming out, something to keep in mind, of course, the big day. How can I say it? look, at the moment, the forecast for the headline CPIs, the year-on-year figure, is for the number to drift lower by just 0.1%, whereas the year-on-year core figure is expected to come out the same. So in general, overall, the expectation is for the inflation number actually to come out kind of close to the previous numbers. And this is where it's interesting. So at the moment, I mean, let's say if the market is expecting numbers like similar to previous numbers, then any deviation up or down or whatever, I mean, could cause nice volatility in the stock market and indices and in currencies as well. Of course, commodities like gold and oil. But of course, the most important thing, if you are going to be trading this, guys, be careful. Have your stop losses in place, risk only what you can afford to lose, and don't overtrade. That's very important. That's why I keep on saying all the time. So, because look, from the technical perspective, let's say if we take a look at Dow, for example, right? We did push higher. Okay, that's great. So normally, if I stick to my game plan, I would say, look, my next target is this one, the all-time high, which was reached back in January of 2022. And that's the 36,832 level. Let me just double check something, guys. Just a sec. Let's see if the official trading view average futures no. Okay. Let's put it this way, because again, Dow Jones TVC. There we go. So this is what I'm talking about. So this is the highest point, the current all-time high, which was reached in 2022 in January, basically last year. So basically, I'm just cross-referencing the charts here. So look, it's a wait. So look, it's a good potential target. Let me go back to my chart because I have more stuff in here. So at the moment, if we stick just with the same game plan, yes, I would remain bullish on this one because we've pushed above my key resistance barrier and we stayed above it. So this kind of opens the door towards higher levels. So basically, if we, as long as we remain above the 36,335 territory, roughly around here, guys, yes, I will continue targeting the upside. So in order for me to go lower, well, at this point, actually, I would like to see a drop back below this hurdle, back below the 36,335. So the same hurdle for me will do two jobs. So I will consider maybe a move lower if we do drift back below it. Or I mean, as long as we remain above that area, then yes, the upside scenario is still valid. However, I have to say that this would be on a, let's say, regular day, if we wouldn't have like data like this today, which is coming out. And like I said, that's why it's very important, because today we have U.S. inflation numbers, which are where the expectations are very close to the previous numbers. So that means any kind of deviation up or down, like by let's say a decent amount, then yep, that could trigger some one-way traffic here. Another thing as well is that tomorrow we also have the Fed, so everything's kind of aligning. All the stars are aligning together because again, the Fed will be watching the inflation numbers as well. And it will be very interesting to see what they will say, because, for example, if the inflation number comes out much higher than the current talks of possible rate cuts, could I wouldn't say vanish, but diminish, because look, at the moment, the expectations here, because for going before June, before mid-June, before basically mid-year of next year, the expectation currently is to see a kind of a 50 basis point cut. So that's what I'm saying. So if inflation is not slowing down, then maybe this could, shift back to the current levels where it is. So maybe, we could see some speculation here, for example, that there could be a rate increase, you know. But again, okay, the increase will not happen in December. I mean, that's already like, unless somebody really wants to bring all this down a little bit, that's why it would happen. So if, for example, if inflation, this is a crazy scenario which I want to describe, and this is like, again, it might not happen because it's just like maybe way too crazy. So if we're seeing a strong rally and we're not seeing like a correction, any correction lower at the moment, it's just like one-way traffic, honestly. And if we need to bring the market back down again, so maybe let's say inflation comes out higher, or let's say maybe, you know, by something like maybe by like 50 basis points higher, and then the Fed suddenly says, oh, you know, now we're suddenly gonna. They don't need to even like increase rates, but they just have to start saying that, oh my God, that like really inflation is getting out of hand again. We need to start looking again at rate increases. And this is where the stock market could reverse lower. So basically, they are not increasing rates, but during, let's say, the press conference, the Mr. Powell could start saying that, yo, look, inflation is like way too high, or let's say starting to showing signs of reversal back to the upside. That's not good for the Fed, and that's why we need to bring rate increases back on the table. Congratulations, we have ourselves a nice little correction back down in the stock market. Let's see if that can happen. Again, I'm just making these bets right now. You know, I'm an analyst, and I need to kind of analyze this and try to find all these different scenarios. However, now the alternative scenario is that if inflation comes out, let's say, roughly the same as previous, that's fine. Actually, the market, that would be okay for the market. It's like you know, like in football, let's say, if you just need either a win or a draw. You don't need to lose, right? It's like the same story in there. Like, so Fed, if inflation comes out, let's say the same or lower, it's like a win or a draw, right? I mean, or the other way around, a draw and a win. The same as the draw, the lower is the win. So and then, you know, like, but as long as you don't lose the game. So that's what I'm saying. So it's a very interesting spot right now, and we are aiming for those all-time highs. My only question, will that happen right now, or will we get like some sort of breathing space here for the bears first, and then at the end of December we will rally again? So ideally, it would be great to see maybe a bit of a retracement first, and then maybe, let's say, and going into the last weeks of December, maybe to see like an explosion to the upside as well. So yeah, at the moment, let's be careful and cautious. I forgot to mention good morning everyone in the chat room. I hope you're all having a beautiful morning. So the S&P 500, guys. So yes, looking at the picture here, I mean, we rebounded from this downside line, so that's fine. I talked about this little box here. We broke it, and we are now testing this this highest point of this year, or should I say, we're coming close to testing the highest point of this year, near the 4,634 territory. So at the moment, I would say everything's looking quite nice, quite good. Let's see if we can clear it and create a new all-time high, or sorry, not keep on saying, a new highest point for this year. In terms of the all-time high, why is it not typing? 500, that's the one that I wanted. So this is like okay, so basically the all-time high for this one is still further away, guys. Now that happened also in January 2022. The question is here, of course, will we see that move further north? At the moment, yes, everything's looking quite nice here, quite positive. But we need to see some clearances, and look, I mean, we do have these strong areas of resistance, which I'm right now putting on my chart. As you can see here, this is a daily chart, by the way. Thanos 410, good morning. Good GM, I'm assuming not General Motors, but good morning, right? So yes, good morning to you too in that case. Thank you very much for tuning in and watching this one. Yes, like I said, the situation here is quite interesting. I mean, for the S&P 500, that's a little bit of a kind of a travel still, unlike for, let's say, maybe like NASDAQ or Dow. But nevertheless, I mean, there is still a possibility. However, ideally, I mean, I would like to see like a reversal here right now, maybe like creating a double top or something like that. But hey, the market doesn't always do what I want it to do. So unfortunately, we'll have to just go from what we have. In terms, so coming back to my S&P 500, so yes, like I said, we are approaching, on my chart here, you can see that these are the futures, by the way. We have like differences a little bit. So wherever you look at, check what you have, guys. So yes, on my chart here on the futures, we are coming close to the highest point of this year, and I think that we'll clear that one, to be honest. But again, the question is, will we stay above it? NASDAQ 100. So again, this one is pushing nicely to the upside. Look, I've rearranged the chart a little bit here. I wanted to, because yesterday I've posted like an idea on our, you can check it out on our page here on TradingView. So basically, this is the idea where we were still in the box here on the weekly. It was a clear view here, and said to that, look, if we do push through this barrier, through the upper side of it, then there is a good chance for this one to travel towards the current all-time high, and also towards the 16,659 territory, which is the highest point of December. And then, yes, the all-time high is December of 2021, and the all-time high is somewhere around that November time, the highest point of November 2021. So that's the all-time high. So that's roughly around the 16,767. So on my chart is a beautiful number of 16767. So yes, this is, like I said, this was the idea that I've posted. So we were just kind of fractionally above this. Yes, I mean, I think that it picked up some nice good traction. Okay, look, I can see I can see some comments there, like not yet, but look, this is what's happening right now. So it is happening, unfortunately, maybe for the Bears, but hey, okay. At the moment, I will stick to the same game plan, but I will have to reiterate a little bit, saying that given the day, given the 2 days that we have right now, there is a chance, of course, for a reversal a little bit. But again, let's see how inflation will come out today. If it's going to come out higher, we might see maybe a bit of a, maybe initially like a spike, but then a reversal back down. So let's keep an eye on that one. The German index, honestly, this one is an animal. Look at this one. Look at this one. It just continues to rally. I mean, I don't see where it can stop. This is just madness. Yes, I mean, yesterday it seems like maybe we could see a bit of a retracement or something like that. No, it just continues to rally, and that's it. However, what do we see here? We do see a little hammer, and that could be seen as a little potential reversal signal. So again, I'm not saying anything. I'm not saying that this is going to for sure happen. No, but look, I'm trying to kind of analyze this. I'm trying to see some sort of signs. And like I said, a special day like today, and like the last U.S. inflation number. Look, I mean, I'm not saying that like something is very how to say it, like U.S. inflation numbers are more important than any other country inflation numbers. No, for sure, that's like totally not. But the only thing is, I'm going from the market perspective. Like the market suddenly decided, like, okay, let's take U.S. inflation numbers as the kind of the benchmark for everything in a way, right? Okay, look, I mean, at the moment, I would say it's that case. I mean, but if everybody's watching, if everybody's creating so much hype around that, that means that the market, more people will react to that. So we people tend to, idolize something, we tend to kind of create hype about something, and then we build an industry around it, right? So yeah, and that's why, like I said, if everybody's right now monitoring the U.S. inflation numbers, okay, let's play the game, let's play along. But that's what I'm saying. So I'm going to be very careful here today, and yes, I am kind of, let's say, I'm sticking to the same game plan, and with higher if inflation comes out higher, then I mean we could see a bit of a correction back to the downside. That's my logic. Again, some of you might agree, some of you might not, but look, you're just listening to my opinion, and then building your own opinion based on, let's say, where you gather information. That's what we all do in general, right? We gather information here and there, and then we have like apply our own knowledge, our own experience, and kind of try to present like maybe a new idea, or maybe agree or disagree with some other idea. So we basically we analyze, we elaborate. And at this point, looking at the German index, okay, we had a good run to the upside. My question here right now is, can we see that a larger correction to the downside? Uh, it's a very difficult one right now. Look, I mean, I'll probably just keep an eye on it, just continue observing the price action, and I'm going to wait for that signal. Now, look, what I can do here is actually something interesting. So, for example, if some of you, let's say, don't want to miss the kind of, the top here, because you know what's going to happen, right? Something comes up and it's going to just fall off the cliff, and everybody will be like biting their nails and thinking, like, I mean, I should have captured that one. Look, for me, I'll put it this way. If I'm trying to play this short-term idea, maybe, let's say it drops somewhere below yesterday's open of my candle here on my chart. Again, you might have something different, guys, but like the opening area of my yesterday's daily candle, if I on my chart is roughly around the 16,808 zone. If we do fall below it and stay below it, I will consider a maybe a bit of a retracement back down here, because again, I really want to see a retracement. I mean, some of you are also looking out for that one, but look, the market can still rally. I mean, especially if we do pop above the current all-time high, which is around the 16,866. Guess which level is further down the line to the upside? The psychological 17,000 mark. So why not to reach that level this year? Take everybody out and then like reverse back down. So, the market does like to do stuff like that, so we know that. So just be a little bit more on the careful side, guys. So the FTSE, and like I said, don't be greedy. I know everybody's waiting to capture this big drop to the downside, but what could happen? We could see a drop lower. Maybe, this is where a lot of traders could get comfortable, start jumping into sell action, and then it reverses back up and then travels toward that psychological 17,000 mark. And then congratulations, a lot of unhappy people, a lot of unhappy sellers. So that's why sellers, be careful for now still. I mean, we need some confirmation. We're not really getting that yet. So I would say I'm just observing the price action for now. The FTSE 100, let's have a look at that one. So this one yesterday had a drop. And look, this today, we had some data from UK. Let's have a quick look at that one. Yes, so unemployment number came out, 4.2, so the same as previous. But what's interesting, claimant count change did increase, and that's basically a bad sign. So there's more people claiming. And the average earnings, excluding and including bonuses, dropped. So like that's maybe a bit of an indication of lower inflation. So yes, I mean, maybe that could help stimulate the stock market, and we can see that that's why the stock market is not really dropping. It's still seeing that as a positive, because again, lower average earnings means that people are getting less and people can afford less, and this could put could bring inflation back down a little bit. And just to have a look at the UK's inflation right now, currently it is sitting at around 4.6. So nowhere near the twice the target, at least twice the target of the BOE, which is around 2%. So yeah, okay. So that's why we're seeing some positivity still here in the FTSE 100. So my next target is this downside line drawn from the high of the 15th of September, and then we'll go from there. Now, US dollar index. So the picture here is quite interesting as well, because look, we broke the upside line, and what I really want to do here is I want to get rid of this. I'll keep the arrow. I have to redraw all this, because again, this is getting a little bit messy, and let's remove this upside line. I mean, maybe the upside line should have been drawn this way. In that case, there is still a chance for the bulls. But if we do break this upside line, then yes, great, more sellers could join in, and we could target the 103.07 territory right there, and we'll go from there. So the 103.21 is the next target. So if we break the upside line. Again, I know that it's a little bit on the tentative side, that upside line, but hey, trying to find some sort of logic here. So maybe this is not going to really go lower yet, because maybe we're still kind of not far from these EMAs. So maybe we could still see a push higher. But at this point, I think the better option, I think, would be for the upside is to wait for a push above the current highest point of December near the 104.26 level right here. And again, we're currently in this period where today we have inflation, tomorrow we have the Fed. So let's see if inflation can boost the dollar and the Fed can also boost the dollar. So let's keep an eye on that one, guys. I mean, that could be quite interesting. And that's why my upside scenario starts off from around here, from around this 104.26 and the 50 and the 100-day EMAs, and then we'll go from there. So if we do get a nice clearance of that, then yes, I will consider a further move north. So looking at gold, there we go. Gold, I mean, this one continues to run nicely. I mean, this is beautiful. So this is just really, really nice, and I want to refer back to my weekly chart where I've posted this analysis, and people kind of picked up on this, so that was great. Wonderful, wonderful. Oh, I got a nice comment here. 1K. Okay, 1K. Why not? Why not? So 1,000. That's good. That would be radical, honestly. Like, that would be really, really interesting. But anyway, so this idea I've posted here, and it's working out so far. I mean, we're really drifting nicely to the downside. So long story short, I would say that if we continue to stay below that psychological 2,000 mark, then yes, of course, lower levels here could be met. I think I need to jump back into my daily chart. So basically, I'm targeting this this hurdle here, this 1965 area, and then yes, we will go from there basically. So yes, long story short, at the moment, I am looking at some lower levels, and at the moment, yes, I'm targeting the 1965 territory, or maybe even lower, the 1933 zone. Let's see if we can reach that. Jumping into silver. Okay, beautiful. Look, beautiful test of this upside line. I mean, this is picture perfect. All good. The question is, can we see a break of this upside line? Well, to be honest, I mean, if I'm expecting a push in the US dollar and the slide in gold, then hey, maybe silver could follow, you know, after that as well. So let's see if this happens, if we can see a break here. But look, at the moment, I mean, I'm not saying anything. A rebound here at some point could be possible. Maybe back to these EMAs towards this area, the 23.56 zone or something like that, and then maybe a reversal back down. But again, we're very close to this upside line, and we have inflation. So just we have inflation numbers coming out. So that's why I am watching this upside support line. Jumping into oil very quickly. So yes, a beautiful retracement here. So far, we're holding below this downside line, below this hurdle here, this 72.38. I talked about this. So yeah, in order for me to go lower, I would say there is still a good chance for doing that. And I see still some downside pressure on this one. So long story short, for now, I am leaning still towards the downside. I'm looking at this as a little temporary correction before another possible leg of selling. In terms of the upside, if we are looking at some upside levels, I mean, we're in a falling channel in general. So any upside right now is kind of considered as a little temporary correction before another possible leg of selling. So so I'm currently looking at this upside scenario only up until here, up until this upper side of the falling channel, and then we will go from there. If we break that one, great. It could open some higher levels, and then we'll go just from there. Multipelo, I can see that you're writing something in Arabic. Unfortunately, merhaba, first of all, to you. But unfortunately, I do not speak or read Arabic. So, yes, sorry for that. Basically, yes, that's the situation with oil, natural gas. Okay, natural gas is very interesting, and talk about this little reversal signal. I mean, this is spectacular. This looks very, very attractive, and maybe for a little correction back to the upside. So basically, something like this. Multipelo, I don't know, honestly. Like, you need to have a look at our website, check out go into spreads and pricing, and check out this. I mean, again, it depends on your region, but I mean, it should be the same. But I mean, you'll have a different website. Basically, I'm on the European side, so that's why I am. Just check out our website and go into trading, and then spreads and pricing, and you'll get all the information there. So yeah, Multipelo, yeah, just check out the website. I mean, it'll be much easier and better source of information for that. So, Jahai 82 gold. I just spoke about gold just a few minutes ago. So, I mean, this is the big list that I'm going through every morning. So I need to continue because I have an hour, so I need to go further. So just have a look at my recording session after this video is finished. The recording will be stored in our page here on TradingView, so you can always, it's in the stream section, so you can find it there. But yeah, look, I've already talked about gold, so I'm just gonna continue with that. And you can also check out my previous sessions. Actually, just quickly scroll through. You know, if you don't need to, if you're not interested in indices or anything like that, just kind of scroll through it very quickly, and you know, you'll be fine. But look, natural gas here, coming back to this, I mean, it looks like a very nice, beautiful possible reversal signal. We dropped below the lowest point of August of 2023. We did create, I'm not saying a new low for 2023. No, the lowest point of 2023 so far is around here, or yeah, no, sorry, it's around here. It was in April, and that reached the 1.95 zone, or like roughly around there. So we didn't go there. We just found good support instead near the lowest point of August. Yes, we pierced through it, but we kind of climbed back above it. So at the moment, it seems that we could be getting maybe a little bit of a correction back to the upside. Let's wait and see, guys. So wheat is also something that I keep on monitoring occasionally, because I do like these exotic pairs. Oh, sorry, exotic pairs. They're exotic commodities, and for some maybe it's an exotic one, for some maybe not, but in general, maybe not the most traded instrument. However, it does present itself with nice opportunities. So previously I talked about this range. I said to you that I need to see a clearance of this, one of the sides of this range, in order to consider the next short-term directional move. We did get a clearance of the upper side. We pushed higher. Then I said that I'm targeting the 200-day EMA, tick. Now we got a hold up. We are reversing back down. So what I'm saying here, as long as we remain above the somewhere above the 596 territory, somewhere like that, then yes, there is still a chance for a reversal and a push back to the upside. So basically, in a way like this, where we could target the current highest point of December near the 649 level. Now, in terms of if it starts falling below this hurdle right here, below the 596 territory, then yes, I will consider a move lower, because maybe at the same time it would fall below the 50-day EMA, and that would be the last EMA on my chart here that I have. And yes, it would be, we would be below it, and this could potentially kind of increase the chances for a further move south. Bitcoin, let's have a look at that one. So there we go. Yesterday we did decline, and we remained below the 43,100 zone. I talked about this yesterday and said that, look, if we do stay below this area, I'm leaning towards a larger correction to the downside, towards my upside support line drawn from the low of the 14th of November. Now, so far so good. As long as we stay below that area, yes, I'm going to lean towards this upside line, and then we'll go from there. If we cleared out that upside line, wonderful. More sellers here could join in, but hey, let's go slowly, step by step. Ethereum fell below the below this 2,300 zone yesterday. I talked about this and I said that if we stay below it, I will once again aim for this steep upside support line drawn from the low of the 3rd of November. And so far, it seems to be like on the right track. And if we do climb back above the 2,300 territory, that's from where I will lean again towards some higher levels. Litecoin, and Litecoin is very interesting here, and as well, similar story. We're still above an upside line, but we're drifting lower. So basically, it's for now, I'm classing this as a temporary correction before another possible leg of buying. This barrier, I need to probably mark this one instead. That's the current highest point of December near the 79.55 level. Okay, look, I'm tempted to draw a rising channel, but I really don't know if this is gonna be seen as a good rising channel. So maybe this is a rising channel, maybe it is a rising wedge pattern. But again, maybe it's not a very attractive rising wedge, so let's get rid of it. Let's for now stick to the idea of a rising channel. Let's jump into a few pairs, forex pairs. Yes, AUDUSD pushing back up. Of course, like I said, keep your eyes on a lot of USD pairs, especially AUDUSD. We're seeing some weakness right now in the US dollar, but again, look, I talked about this recently, and I kind of said to you that at the moment, what I'm gonna do here is I'm just gonna wait this one out, and to be honest, I'm gonna allow it to move anywhere it wants inside here, in between these two trend lines, because I really don't know what could happen here. I mean, it could bounce around, it could fluctuate. If you do like something like that, okay, feel free, but I rather wait this one out and wait until we get a nice clearance outside of this range, and then we'll kind of, or not, sorry, not range, but we'll get a clearance of one of these trend lines, and then I'll consider the next short-term directional move. AUDJPY, so yes, pushed back above the 95.83 territory. Okay, that's wonderful. We stayed above it. So in a way, kind of, there is a chance for a larger correction to the upside here. Out of curiosity, let me just check the Fibonacci here. Okay, yes, we did the 50%, so maybe if the okay, that's interesting. So if we already did the 50% retracement on the Fibonacci here, if we draw it from the high of the 24th of November to the low of the 7th of December, so if that's enough for this pair, let me just see if this is gonna work. Okay, it's kind of pretty similar. So anyway, that's fine. So if that is enough for this pair to do, then maybe a bit of a retracement back down here could be possible. And look, I'm not saying anything, but in general, this all could align very nicely, just because why? If the stock market does reverse south, we could see AUDJPY reversing south as well. Why? Because everybody would be jumping into the yen, into Japanese yen, another safe haven, which people do like to consider when the times are worse. So, excuse me. That's why at the moment I'm being very careful, very cautious, and basically I think that the more logical approach here would be to aim just for the 61.8% retracement initially, if we want to aim for some higher levels. But for that, I need to see a pop above the 50% retracement on the Fibonacci, which is roughly on my chart around the 96.15 level, and then we'll go from there. AUDNZD, one of my favorite pairs, and look, so far it's doing a very nice job. It's getting a hold up near above this 1.0705 area, roughly around here. So somebody might say, but hey, maybe it's forming a nice little kind of inverted head and shoulders pattern, with the left shoulder being here. Maybe something like in among the lines of this. So with the left shoulder being here, the head that we're now doing the right shoulder. But again, that's very either way. Either way, maybe a break of this line here could do the trick for a few more buyers, and we could aim for the other downside line drawn from the high of the 1st of November, and then we could take it from there. So, long story short, for now, I would say if you are looking for some higher levels, then yes. Let's like I said, let's keep an eye on this downside line, this first one, the steeper one, and then we'll go from there, guys. So I think I went my mind went blank on this one. Look, I think, yes, I need to repeat that a little bit, because I think I just realized that my mind went blank, and I just saying whatever I want to say. So look, for the downside, a drop below the 1.0705 territory is required. For the upside, a push above this downside line, this little small one here, is needed. So that's the game plan. At the moment, the 1.0705 territory is doing a fantastic job, so that's great, wonderful. But if we fall below it, I will consider a move lower. Now, another thing to consider here as well on this pair, I really like this pair. It's very, very technical. And another thing is this upside line. Look at this. Look at how amazing this is playing out. So this is drawn from the lowest point of December of 2022. Is it? Yeah, it is. So it's a good area as well. So basically, for the short term people here who like to look at short term things. So I'm also one of those guys, by the way. So but at the same time, I do like the bigger picture as well. So yes, a drop below the 1.0705 territory could lead to a test of this upside support line. So don't get way too excited with, let's say, the downside. No, it could lead to this area first, and then we could kind of take it from there. NZDUSD, very quickly on that one. This one's pushing back up, or at least trying to push back up. So let's see if we can get there. Now, what I really want to do here is I want to remove everything and start fresh, because it's a little bit in the way, and you need to do this occasionally in order to clear up the chart, because this way you also clear up your mind. It's not cluttered. You try to keep it as simple as possible. And yeah, I mean, you will see that it will always work out better. Now, in terms of this one, so we are above this upside line drawn from the low of the 1st of November of this year. Now, this is a little bit on the tentative side, this upside line, because we only have 2 touches here, so maybe it's not going to carry much significance. However, so far it seems like it's doing a good job. And also, what I'm looking at here, I'm actually looking at, from the short-term perspective, I'm looking at this downside line right here. So far, we're getting a little hold up. If we can clear that downside line, yes, I will go higher. But if we cannot, don't be surprised if we drift back down towards this other upside line, this upside line here. And then we'll have to just wait and see until we get maybe a nice clearance of that one in order to go lower. USDJPY, so far so good. Look at this. Look how well this is playing out. I talked about this yesterday, by the way, and we are seeing already a reversal in this pair, and we're seeing some yen buying. So maybe the market is looking at something a little bit more negative. However, okay, let's not rush into things. Maybe it's just a little temporary correction before another possible leg of buying. So if we do break this downside line, then yes, this is from where I will consider some higher levels in terms of the downside. A drop below the 200-day EMA here is required. A drop below the 144.54 territory could do the trick for a few more sellers. USD CAD drifting back down, but we're still above the 200-day EMA. So maybe this is just a little correction. So either way, for me, the upside scenario still comes on a break above the 1.36 territory. For the downside, I need to see a drop, and I need to see the body of the daily candle staying below the 1.3540 zone, somewhere around here. And then, yes, I will go lower. USDCHF, just a quick update, so we're retraced back down, so that's fine, but we're still above the highlighted zone here, which is roughly between the 0.874560 levels. There is a chance to see a push higher, but again, a break of this downside line is required. For the downside, a drop below the 0.8745 territory could be ideal. GBPUSD, so yes, let's see what so far it's doing a good job, because again, I talked about this previously, and there we go. I mean, I also posted, by the way, a analysis where I'm kind of expecting this one maybe to rebound at some point. However, if we break the upside line, then yes, we could see a move move lower. Apple GR Gold, please. I missed it. Look, unfortunately, I need to go through the remaining, and I'm running out of time because I only have an hour, and this is the big list that I go through. So just have a look at the recorded session, just out of respect to other people as well, to who have been here from the beginning, from the video. So for in this webinar, so just have a look at the recorded session, and yes, I mean, but this is normally the list that I go through. So basically, you can always actually time my videos as well. If you're only interested in commodities, then they come up after, because it's first it's indices, then commodities, then cryptos, and then forex. So this is how I keep the structure. So yeah, but sorry, I'm not going to jump back into gold. So just like I said, have a look at the recorded session after this video is done, after this webinar is done. GBPUSD, so that's the situation here. Like I said, yes, we are still above this upside line. However, let me just be a little bit less ambitious here with the upside. So if we push back above this hurdle, the 1.2615, then yes, I will consider a move higher. For the downside, a break of this upside line, yes, could do the trick. However, I think that, in my opinion, that maybe it's better to wait for a drop below all the EMAs and then kind of go to the downside. GBPNZD, so this one, I haven't looked at this one for quite a while, and this one so far, it's kind of working out nicely because we were in this little triangle pattern. We broke the lower side. This is what I said too, that I need to see a clearance of one of the sides here in order to consider the next short-term directional move. We cleared the lower side, great. We fell below the 200-day EMA, and it continues so far to do a good job. It continues to provide resistance, so as long as we remain below that 200-day EMA, my next target is the 2.0275 territory, which is the near the lowest point of September of this year. And if that gets cleared, guess what? This will confirm a forthcoming lower low, and we could potentially aim for this little target right here, the lowest point of May of this year, near the 1.97. However, the main target after that, of course, will be the psychological 2 level. That's probably what everybody will be targeting. EURGBP, haven't looked at this one for quite a while, and look how well this is playing out. So look, previously I talked about this downside line. I said that if we do break this one, I will consider a move higher, but actually we we didn't really break it. We kind of walked through it. And that's a big difference, because if we don't break it like with passion, with strength, you know, so no, then it's like it's not going to be seen as a possible like bullish indication. No, so basically what I'm looking at it right now is like I'm seeing a possible maybe bearish flag actually instead. So look, a few adjustments have to be made here, so let me just fix that very quickly. So if we do this here is a pole. It could be seen as a pole. This here looks like a bearish flag. Or maybe a bearish pennant or something like that. But in general, it's kind of something like, you know, something like this here. So again, not ideal, but hey, we're trying to squeeze something out of this run, right? So that's why my downside scenario is still the same. I'm keeping an eye on the level. I need to see a drop below 0.8558 territory right here in order to go lower. This is when I will target the 0.8524 area zone, approximately around there, or maybe even the lowest point of August of this year. Or is it the lowest point of this year? Yeah, the lowest point of this year is here near the, which is the lowest point of August, near the 0.8493 territory. And then we'll kind of go from there. And finally, EURUSD, something that will get affected today as well. We do have, like I said, the US inflation numbers coming out. And of course, we have the US dollar in this pair. And that could have its nice beautiful effect, you know. So, but in general, it could be quite an interesting week for the euro dollar. Why? Today we have the US inflation, tomorrow we have the Fed, and on Thursday we do have the ECB interest rate decision, the last one for this year. So yep, very, very busy week as well. Now, looking at this picture, look, I do understand that this one right now is taking a pause. It's waiting for the news, and we will take a pause with it. We will take the pause with it. We'll wait for it. And I said to you before that, look, we are stuck here in between these two trend lines. But given that they're so wide, I mean, there is like a market inside of it as well. So, you know, that's why I'm going to wait for a drop below the 1.0756 territory in order to consider lower levels, because at the same time we would already be placed below the EMA, all the EMAs. Plural, and then yes, this could be seen as a good opening door for a move towards this upside support line drawn from the low of the 3rd of October. For the upside, I need to see a push back above the 1.0831 territory right here, at least, in order to start considering some higher levels. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your views, your rocket ships, your comments, everything, guys. I really do. So for those who tune in a little bit late, guys, look, I mean, I do have, like I said, I do have a structure, and I go through that one. So if you've missed an instrument, then it, like I said, because I have other instruments to go through, so, and I'm kind of tight, you know, with time, so I'm bounded with time, so that's why it's a little bit tricky for me to go back again and, you know, repeat the same stuff. So it's kind of out of respect for those who have joined, you know, the webinar from the beginning. But you can always have a look at the recorded session. It's always out there. Either it's in the community, you can check the community, or in the live streams section, or you can just purely go on our page, on Easy Markets page, and check the stream section, and you will see all that there. And you can go through all other streams and just check, you know, for the instruments that you like, because the instruments I also put in the description, so you always know which ones are going to be coming up. Now then, guys, as I always finish the webinars with the words that stay safe, have your stop losses in place, you know, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you tomorrow, guys, 7 o'clock GMT time. Bye-bye. Hey there, thank you very much for watching this one till the end. I really appreciate that. So like this video, we speculate your next mouse movement will be towards the subscribe button.